Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Lawrence Rolston of Resource Opportunities. Lawrence, thanks for being with us.
Pleasure to be here, Scott. Always fun talking with you.
Yeah, and we're at the Silver Summit here in Spokane, Washington, one of Cambridge House's conferences. Very great conference, well attended. What's your take on the conference here so far?
Oh, it's a tremendous conference. It's still a lot of enthusiasm here. There's one of the things that's really interesting is that it's a very good collection of companies. Walking around here, just pretty much every one of these companies is something that I would consider investing in, and I can't say that for all the conferences.
That's very true. And in terms of the Silver Summit, I figured I'd ask you about silver. What's your take on silver right now? Where do you expect silver to go in the near future?
Well, the first point is silver's way ahead of where it was 5 years ago, and I think people lose track of that. You look at it on a 10-year horizon. We had a big blip there. We got all pretty excited about that. But if you look at it on a 10-year sort of time frame, we're more or less on that same uptrend.
And where do you expect it to go from here?
Well, I expect it to continue going higher. Obviously it's exciting when it has a big run and it doubles, overnight sort of thing. But the reality is, I see it trending higher, but not necessarily in a big hurry. We may see, some sideways movement or even some further up and down sort of gyrations in the near term. But longer term, it has to go higher.
And what's your take on bullion versus equities? The stocks haven't been hit so hard in the last couple of years, and right. Silver as well, come back from 50 to 22-ish.
Right. Well, in the talk that I gave here, I addressed that. I did some analysis on it over the last little while, and I found, on average, an average silver equity versus bullion, the bullion did better. But what was really, really interesting is that there were a number of companies that did much, much, much better than silver, 6-8 times the pace of advance compared to silver. And so what was really interesting was looking at those companies and trying to figure out what was it about those companies that made them perform so much better than silver.
And what was it? What did your analysis tell you?
Well, most of the companies had developed mines. They took advanced stage projects, they took them into production. But even more important than just having a single mine in production, all of the ones that were really successful had multiple mines in production. And I think that's really the key to value, is getting beyond struggling into production with the first mine, which is always a difficult experience. But if you can get through that, and then you get a second, a third, and a fourth mine, then the return potential is really enormous.
I'm sensing a trend here in terms of the equities you're looking at, where in the past you've looked at early stage exploration companies, pre-development, and then developed producing companies. What's your focus right now?
Well, the focus right now, even before doing this sort of detailed analysis, by the way, but really looking more at either producers, ideally a small producer on its way to becoming a big producer, or an advanced exploration project with near-term production potential. And part of the reason for that is it's a very good balance of risk and potential reward, but more to the point, there's money available for the companies at that stage right now. In fact, there's an enormous amount of money available for companies that have production within sight.
Well, and that's, there's money available, and that's the key thing. There's a number of brokerage firms in Toronto that are basically saying, no, we will not finance exploration and just drill holes, but we will put money into something that's near-term production or that's producing.
Well, that's right, and it's not just the traditional brokerage type investors in the space bringing their the traditional institutional investors in, but there's a whole new set of investors coming into the resource space right now, and that's private equity. The U.S. private equity industry has not had great returns over the last few years. They're looking for ways to enhance their returns, and they're seeing the absolute astounding values in the resource market at this time. They're getting really excited about it, but for the most part, they don't know how to play it. But the money's there, but the criteria is very strict. They want production.
Well, you've had a lot of conversations with groups like that in terms of how they can get into the space and what type of companies they should be following. What's been the response?
Well, the response has it's been a kind of a funny experience. I mean, they look at companies that are down 95% in value and say, gee, we'd like to buy a few of these companies that are trading for a nickel and a dollar.
And they want to buy the entire company.
Right, but then they look at it and they realize that the ones that are down 95% deserve to be down 95%. The ones that they want to buy are maybe down 30 or 50%. and then it's not exactly a no-brainer anymore, and you've got to look at them in careful detail and do a lot of analysis and a lot of due diligence.
Well, and a lot of the times they can't buy the entire company or easily, where they have to come in first to a 10% position or 20% position, or find some alternate way of getting a piece of the company.
Well, that's right, and private equity doesn't like taking minority positions in these companies, and that's been a big challenge. They want all or nothing. And so part of the challenge here is finding a way that works. And I've come up with a concept that seems like it's going to work out very well, which is base metal streaming.
Please explain that to me.
Well, I think most people understand Silver Wheaton's business model, which is taking a silver stream out of a base metal dominant mine, putting it into a silver dominant company and getting a big bump in the value. Well, what we're looking at doing is sort of turning that model upside down, looking at a silver dominant company or a gold dominant company and streaming the base metals to enhance the proportion of the revenue stream that's precious metals in the public company.
Well, yeah, that's it for the vast majority of companies. They are valued based on the precious metals, and they get little or no credit for the base metals.
Exactly. So you take that, you put it into a private equity vehicle, and that provides cash flow that is non-dilutive and doesn't involve giving up a single ounce of silver for the silver company.
And it can allow those pre-development or development companies to get into production, or someone that's already in production to expand their production through a second or a third mine.
Absolutely.
Yeah, it sounds like a great idea. I'm looking forward to hearing more about that as this private equity firm does more deals.
Yes.
Now, I wanted to talk to you a little bit too about the exploration companies or development companies that you're looking for. Is there specific ones that you like or that you recommend right now, and whether you own them or not?
Well, as always, I'm reluctant to talk about companies that I cover in my newsletter because my newsletter is entirely subscriber supported, and don't like talking about companies in a public forum. But as we've talked about, the companies that are in production or moving toward production, they have access to cash, and therefore they've got the best prospects for enhancing value in the near term. I still like exploration companies, but it's really hard for a typical exploration company at this time to raise money. But there's a couple of companies that I've looked at recently that I really like, that are building on historic work, and that's a model that from the very beginning of the newsletter I've really liked. You take, in one case, 6 decades of historic work in a district, and for the first time it's being put together by a company that is really getting some value out of that historic work.
And our viewers can hear more about your publication, Resource Opportunities, on your website, and visit you at various different conferences.
Yes, on the website you can get a sample copy. We're not doing a hard sell with anybody here. If you like the newsletter and you feel comfortable with it, then great. Let's do something.
Well, I highly recommend it. I've been a reader for over a dozen years.
Okay.
Thanks very much for being with us, Lawrence.
Good talking.
Again, that's Lawrence Rolston of Resource Opportunities. My name is Scott Gibson of Beneath the Surface. Thanks for being with us.
Okay. Well.